Welcome back to the videos related to mutual funds. I hope by now you have an idea as to what is the meaning of mutual fund and the concept and the characteristics of mutual fund. So normally for an investor, for a common man, it is possible to arise a doubt or a clarification as to why should I invest in mutual funds. So today we will be discussing about why should I invest in mutual funds or the reasons to invest in mutual funds and also a brief history of mutual funds in India. First of all, the main reason regarding investing in a mutual fund is the expertise. So as we know, as I mentioned yesterday, every mutual fund has got a professional management. The investors get the expertise of professional money managers who watch the fund's portfolio and on the basis of which they decide which shares are to be bought and which shares are to be sold. So there exists a professional management or expertise in the case of mutual fund. The second reason is the diversification of portfolio. For a small and common man, a common investor or a small investor, he cannot go for diversification as he has only limited funds in his hand. So when a person invests in a mutual fund, he participates in a large basket of shares of different companies belonging to different industries. So there exists only a minimum brokerage that he has to pay for the service. Okay, so the third reason for mutual fund investment is a reduced risk. The mutual funds invest in a number of reputed and well managed blue chip companies. So, even if there is a fall in the prices of a few scripts, it will not affect the income of the trust very much. So, the risk is reduced to the minimum. At the same time, if the investor invests directly in the company, all the risk of potential loss will have to be borne by himself. But in the case of mutual fund, the risk is shared among different investors. Reason number four is assured return. The mutual fund unit holders get an assured return in the form of dividend as well as in the form of capital gains after a particular period of time. Mutual fund also helps in inflation management. So, in an inflationary economy, the conservative investors, that is, the retired persons and pensioners, in the absence of any source of income, they switch over from the bank deposits and fixed deposits of companies to mutual funds. So, in the case of inflation, there may be fluctuations regarding the interest rate for the bank deposits and the fixed deposits. So, in order to avoid that, the investors invest in mutual funds at times. Reason number six, automatic reinvestment. What is automatic reinvestment? The dividend and the capital gain received by the investors from mutual funds can be reinvested again by themselves. So, if that investor is an individual investor, he may not find it very easy to reinvest because he is tempted to spend it more than investing it or saving it. So automatic reinvestment feature of mutual fund is in the form of a forced savings that helps the investor to reinvest their earnings. And next is transparency. There exists transparency in the case of mutual fund for which only a minimal brokerage amount or a professional fee is charged from the investors. Next reason we have is the tax benefit or the tax shelter. So some mutual funds are permitted by the government to launch the equity linked tax savings scheme ELSS, and the investors who invest in those schemes, they get a tax relief under section 80C of the Income Tax Act. And mutual fund also provides a variety of schemes or a range of schemes in which the investors can invest themselves. And it is simple and it is convenient for the investors to get invested in the mutual fund because everything is managed by a professional manager or a fund manager. In case of mutual fund, there also exists the feature of liquidity, the liquidity of investment. So the mutual funds will announce the repurchased price or we'll call it as net asset value, regarding which we will discuss later. The mutual funds will announce the net asset value or the repurchased price of the units daily or at close intervals. So the investor can get money through the sale or redemption of his units. So thus he enjoys the liquidity for the investment. So each and every single and common investor is getting an opportunity to invest in the shares or the securities of a blue chip company, and the investors will be satisfied to the maximum level. And there also exists a saving habit among the investors or among the public at large. And they are also able to afford the mutual fund, which in turn helps in the wealth creation for a customer or an investor. Now let's discuss about the concept of net asset value. So net asset value means it is the intrinsic value of each mutual fund unit. That means the market price of each unit, which indicates the performance of the fund, how the fund is performing. Is it in the good path or is it in the lows? So it is an indicator of the fund's performance. So this is the price at which the mutual funds redeem the shares. So after investing in the shares, after a particular period of time or a specified period, the mutual funds redeem the shares or redeem the securities. So the price at which the securities or shares are redeemed is known as the net asset value. So this net asset value can be calculated by dividing the net assets of the scheme by the number of units outstanding. So net asset means it is the market value of the assets of the scheme minus its liabilities. That means the value of funds securities minus liabilities amounts to net assets of the scheme. This is just for an understanding, we do not have any calculations ahead. So I hope you got an idea about the net asset value, which is the market price of each unit or the price at which the mutual funds are redeemed, the mutual fund units are redeemed from the market. So this net asset value is to be published at least in 2 daily newspapers at intervals of not exceeding 1 week. So now, before understanding each and every concept, we should also look into the history of each concept. So the history of or the birth of mutual fund was in USA, and from there we start the journey of mutual fund schemes. So coming to India, in India the history of mutual funds started in the year 1963-64. So the growth of mutual fund in India or the history of mutual funds in India is classified into 6 phases, of which the first phase is from 1964 to 1987. So mutual fund industry in India started in 1963 and with the formation of Unit Trust of India, which was at the initiative of the Government of India and the Reserve Bank of India. So the first phase started from 1964 to 1987, which marked the growth of Unit Trust of India, Unit 64 or UTI. The India Fund, first Indian offshore fund was launched. That was the India Fund. Then the second phase, the phase 2, started in the year 1987 to 1993, which marked the entry of public sector funds into the pavilion of mutual funds in India. The third phase was the emergence of private funds like Kothari Pioneer was the first private mutual fund in India, then ICICI in the 20th century, etc. The fourth phase began in the year 1996 and it lasted to 1999, which marked the growth and SEBI regulations regarding the mutual funds. So, several investor awareness programs for promoting mutual funds were done, and the SEBI mutual fund regulations was implemented in 1996. Phase 5 started in the year 1999 and it was the emergence of mutual fund industry, of a large mutual fund industry in India. That was the repeal of UTI Act 1963. And from 2004 onwards, the consolidation and growth of mutual funds happened in India. There were a lot of mergers and lot of acquisitions happening, and some new market players entered the market. Some old and existing market players left the market. So, the history of mutual funds in India is spread across these 6 phases. And these are some of the mutual fund companies in India, of which many of them are familiar to you. The Axis Mutual Fund, the ICICI Prudential Mutual Fund, HDFC, L&T, then Motilal Oswal Mutual Fund, etc., Kodak Fund. So, of which I think you're familiar with many of these mutual fund companies in India. So, in this video, we have seen the reasons to invest in mutual fund and the history of mutual funds in India and also the growth of mutual funds from phase 1 to phase 6. So, we'll discuss more about mutual funds in the coming videos. The next video we will be dealing with the portfolio classification and the types of mutual funds. Thank you.